which again is total interference there. But I think it's interesting to take a look at some of the money we're talking about, Mike. I mean, look, Hunter Biden was on the board of Burisma, a Ukrainian company. He was making $87,000 a month. We also have emails from that laptop that indicate he received money from the former mayor of Moscow's wife. A $3.5 million check was wired to him from the wife of the former mayor. And the list goes on. Michael Lee, one thing that Peter Schweitzer has reported is that it was a total of $31 million that the Biden family accepted from Chinese officials. That's why we constantly question whether or not Biden is compromised on his foreign policy decisions, because all of the money his family reportedly took in.
Yeah, Maria, just so everyone knows, neither Hunter Biden nor his legal team never, ever, at any point denied the authenticity of this laptop or any of the emails. And so what this is here is the same people who are behind the Trump-Russia hoax and countless other propaganda and misdirection plays were telling us that this was Russian disinformation. It's a joke, and I think for us to take the New York Times or anything any of these other people say seriously going forward is going to be a tough pill to swallow for anybody with their eyes open.
Yeah, it's a good point. Mike Baker, great Bloomberg op-ed giving some strange tips to cope with the record inflation we are all facing. The op-ed tells Americans who make less than $300,000 a year, look, take the bus, don't buy in bulk, eat lentils instead of meat, even cut chemotherapy for your pet. Yeah, this is really happening. Many taking to Twitter to slam the out-of-touch article. A state senator for Rhode Island writes, complaining about the price of gas, the elite say, let them eat lentils. Morgan Ortagus, your thoughts? Somebody sent me a picture of gasoline in Los Angeles, $8.55 a gallon for regular, $9.55 a gallon for diesel. Ouch.
Yeah, Maria, you know, this op-ed really touches a nerve because it's written by an elitist leftist, completely out of touch with reality, and I think that's the perfect metaphor for this administration. And the reason why we have the inflation we have right now is because it's run by a bunch of elitist leftists that care nothing about poor people and live in their liberal fantasy world, and they don't care the consequences for the average person.
It sounds like something John Kerry would write. Morgan and Michael, stay right there. The next hour of Mornings with Maria begins right now. And it is time for the Word on Wall Street. Top investors watching your money. Joining me right now is Michael Lee, strategy founder, Michael Lee. Insigno, Chief Investment Officer, Ahmed Riasco, and Lexard Capital Management founder and CEO, Al Lord. Gentlemen, great to see you this morning. Thank you so much for being here. Michael, kicking things off with you with a market that is pointing lower this morning after a very strong week for all the major indices. Oil prices are once again up. They're above $100 a barrel, continuing the volatility that we've seen. We've got the European Union weighing in now, weighing a potential embargo on Russian oil, and that has Brent at 112.61. That's up 4%. Crude oil at 109.35, up 4.5%. Michael, what's your take on this market volatility? I wonder what you see in terms of last week's performance. Big move upward last week, best performance since November 2020, and I'm wondering if we've seen a pivot in terms of buying growth here.
Yeah, Maria, last week we great bounce back. You love to see the markets come back like that, and it's a bit of you enter into a bit of an oversold situation, and so some momentum comes in. You start buying a little bit of short covering, and boom! All of a sudden, the market's up dramatically. With Jerome Powell in this first 25 basis points that he raised, you know that was a little bit of a sell the rumor as we've been seeing all year. In this case, buy the news, and his remarks were were much less, I would say, hawkish than kind of people were fearing. And as a result, we got some buying and some follow through right there. We'll see if that holds on. And in terms of oil, we are still in a state of backwardation where the futures are cheaper than their current contract because it's a supply demand issue. And the story for oil has been a supply-demand bull case, and that there's simply not enough supply to meet the demand, and then you add this Russia situation on top of it, and prices are moving to multi-year highs. I don't see this changing. You have a hostility from the Biden administration in terms of drilling and fossil fuels, and ironically, the only way for them to hurt Russia is to flip that policy to a drill baby drill policy, which will not only help the inflation case, it'll hurt Russia, and it'll also improve the inflation situation in the U.S. I do not see them making that about face and becoming much more friendly to oil, to fossil fuel to solve all these problems. So I'd expect the price of oil to continue to go higher as the economy continues to recover from the COVID lows of a few years ago.
Well, we'll see what that means for the economy. We've already got strategists taking their growth numbers down. This has only gotten worse. You know, the Democrats tried to walk back the defund the police, but they've been wanting to reimagine the police, and the bail reform has done nothing other than put criminals back on the street to commit more crimes.
Maria, again, I'm going to quote Rush Limbaugh here. Everything liberals touch just turns to absolute, and I'll leave out the last little part. I think you could fill it in yourself. Look, it's the attack on the quality of life for those in the middle and at the bottom. Again, if you're not part of the liberal elite walking around in the Ivy League libraries and the cocktail parties, they simply don't care about you. They have a way that they think life should be with all of these feel-good policies that don't work, never work, and now you're seeing it in the form of inflation and also in the form of crime. And when crime spikes like this, it's not the well-to-do people that pay for this. It's those at the middle, at the bottom, more often than not, those in the minority communities. It's just an attack on the quality of life for everyday Americans over and over and over again.
Yeah, it's very troubling for sure. We'll take a break. When we come back. Russia warning. Larry, hold on. Michael, jump in.
Hey, Larry, we've already seen a tremendous amount of liquidity come out of the market. The two-year Treasury, even though we've only had one rate hike, the two-year Treasury has gone from 20 basis points to now 2%. Chicago Fed National Financial Conditions Index has been cut in half. And credit spreads on double B, I mean, we pulled back a little bit last week, but you basically went from 200 basis points in September to over 300 basis points last week before coming in a little bit. So my thoughts are, if we don't see the rate of change for inflation slow, meaning if we don't see a deceleration in inflation, I see multiples coming in dramatically from where they are here, and the Fed having to be much more aggressive than they think they're going to have. To be. What are your thoughts if inflation doesn't start to slow on a month-over-month basis?
That is the most important point, and thanks for bringing that up, because over the last, say, 9 months, inflation's been here, and and we've really only had the establishment, your Fed, your ECB, your leadership acknowledge inflation's possible sustainability. That's only a relatively near-term thing, the last 3 months. As of like 2 months ago, the ECB was complete denial of sustained inflation. So now we sit here on planet Earth with $80 trillion in financial assets, $17 trillion in the NASDAQ 100, upwards of $60 trillion, $60 trillion in bonds, and $17 trillion in the NASDAQ 100. That's a lot of money in financial assets. So what you're getting at there is the longer inflation sticks around, if you're owning a 10-year bond at 2% and inflation's sticky at, say, 7, 8, 9, 10, your negative real yield is just eating away every day. So the longer it goes on, the more it forces people out of financial assets and into hard assets every single day that goes on.
So is that the place to hide, Larry? Because